time now for the currency report. I want to take a look at the U.S. dollar. Of course, we had the signing of the U.S.-China Phase 1 trade deal. We've had the Senate saying, hey, the new NAFTA, we're behind that as well. We got some economic data out of the States today that's pleasing investors, including a read on the U.S. consumer that's actually looking quite strong. And there you have the Bloomberg U.S. dollar spot against the basket of currencies showing a bit of strength. Let's get some perspective on this and where we might be headed. We have Adam Button, the chief currency analyst at Forex Live, joining us now. Good to see you, Adam.
Hey, Greg.
So let's start with the U.S. buck. Obviously, I'm always fascinated by the U.S. dollar because it can react on its own as a currency for the United States of America, but it can also act in times as that reserve currency for the world. What's the play right now?
Well, sometimes it's in the middle where that's when it starts to sag, when everyone else is doing a little bit better. Right now, the way I see it is it's a show-me moment for the dollar. We've priced in a lot of good news in the last month. You see it in equities, you see it in some other assets, saying, okay, we're going to have a trade deal between the U.S. and China, and then we're going to get a surge in spending, investment, sentiment in general. And now it's time to see it in the data. So it was a big retail sales report today. It was a touch on the strong side, but the last few months have been surprisingly weak on the U.S. consumer. Yesterday we had Target talking about a weak consumer as well. And so I think over the next month or two, we're really evaluating, okay, is this a situation where the tariffs weren't really that bad and the rebound isn't going to be really that good? Or is there something more, another leg of strength in the economy there?
We're hearing all these rumblings right after signing Phase 1 that they want to get right on Phase 2. To me, that seems like a bit of a strange play, even politically. Why don't you just let the wind ride out for a while? So if they get right back into some Phase 2 talks, and then, of course, that can get a little rough and tumble. People throw punches. There's some blows landed. Can we have a rocky ride again?
Yeah, I think there's this honeymoon right now in markets where we're taking that as good news. But, I mean, these talks, the warm and fuzzies will wear off very quickly once they start disagreeing again. So I think the market would be in a better place if they just decided to leave it until after the election. And I think once it shakes out, that's probably better for both sides. And that's the way it's going to go. But I don't think it's a big factor right now, but that's definitely something to watch. And it's interesting, we're at the time now of the year, we've cleared the deck on Brexit. We've had central bank easing, that's run its course, and now we have a trade deal. And you kind of have a market that's out there just looking for something to focus on.
Yeah, give me another reason to be happy. Obviously, we're in the middle of earnings season, so they can ride that for a couple weeks, but they might be looking for something deeper after that. Let's talk about the Canadian buck. If we're talking about the American dollar, obviously we assess the value of our currency for the most part against our biggest trade partner.
Well, and we look at the world out there, and that's the Canadian dollar angle, right? We need commodity inflation. We need global growth to pick up. And inflation could also help the Canadian dollar as well. I think that's a big theme this year, is that we will get an inflation scare of some level at some point this year. And Canada has some of the highest inflation in the world. So if it does tick up, this might be where we feel it first. And then we could see a run in the Canadian dollar. We have central banks easing. And now we're starting to see some house price inflation, even creeping in here. New Zealand, just yesterday, announced 12% jump in house prices year over year, and Canada's kind of setting up where it could tighten up again. So that's one of the themes I think that may develop on the inflation front, on the asset inflation front, and on commodities to worry about.
Bank of Canada, of course, has a rate decision next week. Not a big expectation of being surprised, although he's given us a January surprise. It's been a couple of years since he gave us a January surprise, but he has done that before. But you talked about the housing market, right? In terms of it heating up again, does this put the Bank of Canada in a tough spot? It's been suggested to me that perhaps the bank's models were suggesting to them last year, you should probably cut about 25 basis points. But the real value of that compared to overheating the housing asset may have kept them on the sidelines.
Yeah, and now they'll be feeling good about the U.S.-China trade deal. I think, it's a dry times right now for central bank watchers because there isn't a lot of scope for big moves, big surprises. I'd be shocked if the Bank of Canada were to signal anything at all at this point. And I think really the whole market is in this very delicate balance of watching what's coming next, hoping that global growth is really here, a pickup in inflation is really here. And then if it doesn't happen, well, then that's when the jitters will kick in.
Now, Governor Polaz will be hanging up his hat this year at the Bank of Canada. Mark Carney will be hanging up his hat at the Bank of England. But just last week, some sort of disappointing British numbers on the economy now have people thinking that maybe he's going to have to do something before he leaves.
It is. It's serial disappointment in Britain. I think Mark Carney brought it with him over to the UK when he left Canada. And it kind of came out of nowhere. They said they were going to cut rates. The currency hasn't responded yet, which is a bit interesting. A currency that won't fall on bad news may not fall at all is sort of the rule of thumb. And that should have pulled it down, but it's hung in there. So that's some good news, I think, for the UK. But the growth numbers have been disappointing, and it's really tough to to envision any kind of near-term tailwind from here for the pound.
Now, those are the big three for our audience. Obviously, our own loonie, the American buck, the pound, considering the Brexit and all the drama. Anything else on your radar?
You know, we're really trying to look at the yen and the Swiss franc. There's this large divergence this year. So those are the two safe haven currencies, the Swiss franc and the yen. And the Swiss franc has been running away higher, and the yen has been drifting lower. And it kind of shows markets in general this unease. Equities are running away, but treasury yields are falling as well, which is the same kind of uncertain dynamic. So it speaks to me about just flows of money coming into the market, chasing some momentum, and that, you know, maybe the smarter money is positioning for something a little bit less optimistic, but it's going to come to the data, and I think it's really the time to be watching that right now.
So good times perhaps don't last forever, or perhaps don't even last all through 2020.
No, I'm not. At some point, you have to price in the U.S. election. And that's, you know, we have these binary risks this year. So you have war with Iran or no war with Iran. And it's tough to price. You can't price half of a war with Iran, or you can't price half of a U.S. election outcome. It's going to be one or the other. So there's a big question about when we start pricing in the U.S. election, whether it's in May or August or, you know, the night beforehand. But it's tough to go in there taking too much risk because it will shift one way or the other. And I think that starts to creep into markets in general, and that bigger uncertainty isn't going to go away about the economy.
Always great to get your insights, Adam. Thanks for joining us.
Thanks, Greg.
I was Adam Button, the Chief Currency Analyst at Forex Live.